Welcome to the Next Level Human podcast. As a human, you have a job to do. In fact, you have 4 jobs: to earn and manage money, to attain and maintain health and fitness, to build and sustain personal relationships, to find meaning and make a difference. None of these jobs are taught in school, and that is what this podcast is designed to do: to educate us all on living our most fulfilled lives through the mastery of these 4 jobs. I'm your host, Dr. Jade, and I believe we are here living this life for 3 reasons and 3 reasons only: to learn, to teach, and to love. In this podcast, I will be learning, teaching, and loving right along with you. I'm grateful to have your company. Here's to our next level. What's going on, everybody? So I have a special guest today, Brandon Belk, and I'll tell you a little bit story about Brandon and I. We got hooked up by a mutual friend who you all have actually listened to and who has been on the podcast previously, Jess Amendola. And she said, "Oh, you got to meet my friend Brandon. You guys are totally hit it off." And so what was it, 2 weeks ago, you and I hooked up at High Five Coffee here in Asheville, just down the street. And it's one of those conversations where I was just like, this guy is my people, right? I think I was just like, I could have talked to him pretty much all day, and we covered a lot of things in that conversation. Jess was right. We had a lot in common. So we talked about philosophy and psychology and just our heroes' journeys, both of us, and, sort of how we got to where we got to. One of the things that came up, though, is that Brandon, you correct me if I'm wrong here, but one of the things Brandon does is he works with entrepreneurs to help them understand money and help them understand business. And one of the things that he does around that he's an expert in, that kind of really perked up my ears for all of you, is cryptocurrency and that whole space. One of the things that you'll pick up right away is that, and by the way, Brandon does a lot. I'll have him tell you guys in terms of, I don't know if you're going to be working with people, but you'll probably get some business out of this in terms of what you do. But he works a lot with entrepreneurs and a lot in educating us in finance, and I don't do a whole lot of that. So one of the things I asked him to do is come on, and I kind of want to have him be a regular guest here if he's willing to kind of educate us, because I think this is an area that a lot of us struggle with finances in general, and certainly I would say I don't really know anyone who kind of understands where the financial industry is going and what cryptocurrency is and what's going on. But the little bit that you and I got into, it seems like a lot is going to be changing in the future, and you're one of these people who has a really good handle on it. So I'm just going to stop there and just let you start where you want in terms of telling us your story, anything you feel like background you want them to know, and then we can kind of get into wherever you want to start with the financial sort of discussion.
Sure. Yeah. Well, thank you so much, Dr. Jade, for having me. I can only reflect the same impression, from that first time we met and talked. It was definitely a kindred spirit experience, and what stood out to me was how many parallels. Obviously we all have our different journeys and our different paths, different challenges and triumphs, but there's always, I tend to look at the synchronicities in my environment, and that's what makes it fun.
Yeah.
And for me, everything you said is correct. That is where my primary focus is these days. And, real quick, I can just kind of give a background of, how it came to that point.
Yeah, let's do that.
Because that'll also touch on, where you and I tend to overlap as well. And for me, my journey as an entrepreneur, my journey as an entrepreneur began before even my personal development. I always joke around that when you start a business, that's like the quickest way to develop your personal self.
Yeah, no kid, man. It's like a crash course in self-development.
Specifically the areas you don't want to
exactly.
Yeah,
exactly. You got to grow up quick, man.
That's right. And for me personally, I've seen this paralleled with others that I've talked to, but for me personally, it started in physical health. And that stems from my background as a kid and being into sports and nutrition. And, that was really, I would say my first key passion in life. And I reconnected with that, in my personal growth and personal development journey, as an entrepreneur, and kind of getting back to those roots, as I was trying to maintain my energy and balance myself and perform at my best. And so for me, it starts with physical health, and then that really quickly branches into mental health, and then from there, spiritual health. And then, and for a long time, I thought that those were the three pillars.
Yeah.
And you could throw in emotional health, but sometimes it could be mental or spiritual. But those were my three pillars for years. And in the last 2 years, it's expanded beyond that. I was thinking about this the other day. Those three it's almost like the internal development. And it's funny too, because the name of my brand, the name of my company is Grow.io, which is inner outer, and we spell it like the power button. How you have the I and the O with the line through it. And so that would be the inner health, outer health. Once you dial in and align those things, and start to kind of figure out what works for you, then you've got that outer health, right? Then you've got relationships. Purpose, what's your mission, and what's the health of the impact you're creating in your outer world. And money's a part of that too. Money is the current between energy, or I should say, let me pause. But money, it's the ultimate exchange of value, time, all of that stuff. And so all of these things are interconnected. And like you said, Jade, where we're at in the outer world right now, especially since 2020, there's a lot changing, and I think a lot of people, we've all had our version of a somewhat similar experience, maybe differing on that internal level. And but what I've witnessed is there's these common themes. There's, depending on where somebody's at with their journey, these last 2 catalytic years, have kind of forced us all to go inside and start to rearrange and realign with what's working now. Not what we were doing on autopilot for in our families, in our jobs, when businesses shut down and we had to figure out and adapt, and, people working from home, doing with less, figuring out what's important in life. And I'm speaking materially and in relationships, it's almost like it's a wake up call to purpose for a lot of people, and those who don't really understand that. I know certainly I've had a lot more conversations from people about that aspect of what I do versus the health and fitness aspect of what I do. It's like, so I know we all have been sort of struggling with that, but then there's a lot of questions that come up, at the beginning of that. So I always talk about the hero's journey as being this lightning strike moment that sets us down a path. Well, it seems like we had a lightning strike moment to happen to all of us in tandem. And we're all kind of trying to figure it out, which in one regard is scary, but in another regard, it's kind of like, hey, well, we're all in this together. And there are certain things that we all need to know, and, we can teach and learn. Absolutely. Yeah. And then learning how to navigate, what as over these last 2 years, like you said, we had the lightning strike moment. People are kind of addressing whatever's coming up for them, both in relationships and maybe in business, or maybe in their outer worlds, and or maybe it's physical health, right? And so now we're at a place where, we're starting to see, it's like I said, it's been 2 years now. We've had some different phases. And we're at a place where people seem to be trying to, really dial in. Well, where is this all leading, right? Where am I going now? It's almost like there's this awareness phase, and then depending on how long that takes, you go to the acceptance phase, and that's just kind of acknowledging this is what I'm facing now, and being honest with yourself, and then going from that acceptance to, okay, well, what are we going to do now? Now. Based on how I'm feeling, based on what's going on. Yeah, and there's a lot of talk right now too about, and this is, I guess, can segue us into this discussion. I hear it a lot about, people
you just hear buzz. For example, my business partner's always talking about there's potentially a big recession coming. Things are changing monetarily. I hear a lot of my friends and family talking about that. Different conversations about, the housing market this, or the stock market that, and then obviously cryptocurrency discussion. So I'm wondering for you, why don't we start there with this discussion? What would you say for all of us who are sort of I don't know. I would say I'm the amateur. I don't know how many of you listening are amateurs, but I certainly am. But what would you say for someone like myself or all of us, let's say, who are hearing these conversations and going, okay, what does all this mean? And is there any hints or overarching themes you can begin to kind of set our mind right about what is happening currently financially in all the different markets and what we need to be aware of moving forward? And I'm specifically interested in what is, what role is cryptocurrency going to play, if any?
Mm-hmm. Sure. Yeah. And it's, I'm trying to decide where to start. There's so many layers, but what I will say is, for me, and I want to clarify how I came to this focus, because I said over the last 2 years for me personally, I started, I forget how I got down the rabbit hole of going, learning more about the changes in the financial system, specifically as they related to the changes we were seeing with businesses and that post-COVID time. And as I was doing my research, and I do have a background in finance as well. About 10, 12 years ago, I worked for a publicly traded company, was more like the personal finance coach, and loved it. Wasn't the right container at the right time. And so now here I find myself in that kind of reconnecting with that passion that I once had. And then of course, pulling in all those pieces that I've had experienced along the way in business and entrepreneurship. And so it's interesting for me because I have that kind of like old paradigm foundational knowledge of traditional, investing and how the financial markets work. But then now as we've experienced all these shifts, I can kind of look back and see this is what I felt like was missing then. And I know I'm being a little general here. I'll get more specific, but to understand what we're going through now, we kind of need to go back and look at the history. Yeah, that's where I'd like to start, and then we can go forward as where this is leading to. When you think back to, for most people listening, I'm sure most people would remember the 2008 financial collapse, right? That was predominantly in the housing sector, and created a bubble in the housing sector. There were basically a series of loan. Everybody was getting a loan without proof of income. So it was like if you wanted a mortgage, all you had to say was how much you wanted. And I know it sounds like I'm exaggerating, but that was literally the reality. There was no proof. The proof of income was very, very lenient. And there was the money was there, right? And so then people start buying homes that they can't really afford with their income. They can't afford the mortgage payments. The way that those mortgages were structured, they were in a way that kind of ballooned after a certain period of time as well. And so it created this crescendo moment back in 2008 where the bubble finally burst. And in response to that, really what we're experiencing now is just a delayed symptom of that time. But then you could probably say that time was a delayed symptom of previous eras or previous moments as well. But we'll focus on this one. And what they did in response, and I say they, I mean the central banks, the Federal Reserve, right, the top of the financial industry globally, and they basically they did a few things that are affecting us now, predominantly expanding their balance sheet. And so at the time in 2008, the Federal Reserve balance sheet, meaning like all the assets that are managed by the Federal Reserve, was about $900 billion, which is a lot. Now it's 4.4 trillion.
Wow.
Their balance sheet.
Yeah.
Right. So this is like, it's like what they're allowed to absorb from the economy, because they're kind of like a buffer, if you know what I mean. Like if there's government debt, if the government needs money, they issue bonds, right? Those like government bonds are just sovereign debt. It's saying, hey, like you buy these bonds And in 10, 20, 30 years, the government will reimburse you on those bonds at a fixed interest rate or at a certain interest rate. And so the biggest buyer of bonds is central banks, Federal Reserve. Yeah. And that's how the system perpetuates itself. So really what we're all starting to awaken to since 2008 and specifically now is what happens to a debt-based economy. I'm sure many people hear that like, oh yeah, we're a debt-based economy, or it's a big credit-based, you could say that. But when you really dig into that and look under the hood, if something is based on debt, well, what creates something is what sustains something, right? The energy that creates is the energy that sustains. Mm-hmm. And so a system created by debt can only be sustained by more debt. Yeah. And that's why we see the Federal Reserve, central banks printing more and more money anytime there's a crisis, right? Anytime there's whether it's health crisis, wars, there's just kind of like this carousel of events that require them to print more money. That money gets printed into the economy. They're able to print it by buying up the debt of the government, buying up corporate debt. And so that's how this all started. They went from $900 billion to $4.4 trillion in a little over a decade.
Now, when I hear that, I see that as, well, two things happen. I'm like, that's a huge increase, right? The first thing. And the second part, and so then I immediately go, that must be bad. But then the other part of the way my brain works, I'm like, well, if they can just keep printing money and all the individuals see money, as long as we keep seeing it has that value, which is really decided by us, if we still have trust in that currency, what's wrong with that? I know that's probably a very naive way of saying it, but that's kind of how my brain, that's about the level of understanding I have for this. So one goes, that's huge, maybe that's bad. And the other part of me goes, well, what's wrong with just continuing to print money?
You're exactly right. And when we start to hear numbers, I don't know the exact, I think there's a study that shows that after a certain number, our human minds just kind of say, oh, that's a lot.
Yeah, I can't even fathom 4.4 trillion, right?
Like the difference between, I really wish I could remember, but like the difference between, say, 100 million and a trillion in your mind, it's like a lot and a lot. But then a trillion is what, like 1,000 millions.
Yeah, it's insane.
And then you're just like, it's like light years.
Yeah,
when you start, it's like when you measure things in space, you just kind of like, all right, that's just
too big of a number even to fathom.
Can't comprehend. Yeah. And so when you have that, like you said, most people, it's kind of like, it's hard to analyze it. It sounds like a lot. And like you said, your initial reaction is it sounds bad, but like, it seems to have worked up to now, right? However, we have seen crises along the way, and where we're headed now, in my personal opinion, and I'm an optimist. You'll realize that soon. But even though this initial piece sounds a little bit scary, that's just the reality. When you keep borrowing more debt, and anybody out there that's had debt issues or credit cards kind of getting the better of them, then they could probably attest to this. It's like when you start borrowing more to pay off debt, and then you have to borrow more to pay off that debt, and it starts to snowball. And you were saying, well, what's wrong? Can it just continue to snowball forever? And they've certainly tried. But what's kind of happening now, and why I believe this could all pop next week, next month, next year, potentially. But I feel personally sooner than later, and we can go into more detail on why. But the fact of the matter is, once they've printed to the level that they've printed leading up to 2020, because like I said, this all started. This was to address the 2008 crisis, right? The printing more money, the buying up more debt,
and we're just now feeling the effects of that now.
And they just and so it and then they quietly expand their balance sheet so that they can keep doing it. But like if as a business owner, entrepreneur, like if you just keep increasing. Imagine if you had the ability to just keep increasing your balance sheet beyond what you could sustain. I think the Federal Reserve owns close to half of all long-term government issued bonds. So So as the government spends more money, then the Federal Reserve is buying up that debt that they're holding on the books forever and ever. And eventually what's going to happen is the interest rates of the yield of those bonds is going to start to go up as demand goes down, because we've talked about how it is at the top, right? Like that's like the central banks, the governments, right? They're buying up all this debt. Well, what do we mean by debt? At the very bottom level, right? Where does debt start? Well, it starts with us, with you and me. We go out and get a credit card. We go get a mortgage. We borrow money from the branch bank. The branch bank then, there's something called the fractional reserve system, which means for every dollar that the bank lends out, it counts as 10 on their books. And that's how that also contributes to inflation, right? And so if I deposit $1,000 at the bank, then the bank can turn around and lend out $10,000 to somebody else without having you. So it's just, you see what I mean?
I'm starting to see how that absolutely can get us in trouble at some point. Someone's going to be coming and calling, and the money's not going to be there.
And that's it, because it's just circling through the global economy where, some government, you see some countries have cycles of recession, cycles of expansion, and, they can, like Central Bank of Japan could buy more bonds at one time, but then when they're not doing, so it's kind of fluctuated back and forth, but we've been building this house of cards ever since. And ultimately, it's kind of like a game of musical chairs. At some point, somebody's going to be holding the bag. And at some point, we're starting to see this now with housing prices, because as more debt gets bought up, like the price of, if money is just printed for free, right? If capital is just created backed by nothing, then eventually, the demand's going to go down. Like the prices are going to go up. People are and then as inflation goes up and people are in more debt, they're not going to have that same liquidity. And so it's what we're seeing coming or starting to develop is a liquidity crisis, which is the amount of liquid money or capital that can circulate through the system.
And if I'm correct on this, then the more that begins to happen, the more people put less money into the economy. And then the government has to come in and do the same thing.
Exactly.
Again.
Or like we saw a couple of years ago where, businesses, the economy was pretty much shut down and it was kind of a crisis moment. So then the government, it's like, here's a stimulus check, here's a supplemental income to allow these businesses or people to survive. And that's not coming from GDP. That's not coming from productivity. That's just coming from
printing more money,
hitting a button. Yeah.
Okay. So what then with this and the way I'm processing this, so I'll just repeat back what I think and then maybe you can correct me, because I know and maybe some of you listening, this will be the same for you. Whenever I learn this kind of stuff, I always feel my brain bouncing back and forth, like I talked about before. When I'm like, this sounds horrible, then two, I'm like, well, is it? So what it sounds like to me that you're saying is we've created a situation in our monetary system where we've got this central bank sort of in the middle of the government who is sort of buffering all the negative effects of the way we're managing our income, from the way we get in debt at the bottom of the barrel to the way the government sort of responds to that. And then we have this central bank sort of in the middle that's saying, okay, we'll just keep printing money. So the way my brain would be working is sort of like the central bank is like the rainmaker. You know what I mean? It's basically turning on the rain whenever we're getting into a drought. And up until this point, it's like, okay, we have a severe drought. We're going to just make it rain again. And at some point, I guess what you're hinting at is the clouds are going to go away and they're not going to be able to make it rain anymore. And then what happens? Am I sort of getting that correct?
You are, because when it's a debt-based economy, I said you could say debt-based or what? Productivity-based. Productivity-based feels more natural, doesn't it? Like you produce something, it creates money, or you produce something, it expands growth, right? Creation begets growth. I've been describing a form of capitalism where capital we're saying is not necessarily created
based on any value,
based on productivity or creation. It's just it's like, so if you take out and I'm hinting at global, GDP. So like the productivity of all businesses in the country, and the more success the average or the aggregate of the U.S. businesses out there are doing, then that would help fully inflate the economy in a good way, right? Because it's backed by productivity, it's backed by goods and services. When you're just printing money without being backed by productivity, it's not really capitalism, or it's broken. And so it's like that's what they mean by creating out of thin, there's nothing to back it up with.
So that's really interesting. So what will we call this kind of, if we can't call it a pure capitalism, then what is it?
That's a great question. It's really a way. I mean, we could take this in a few different ways, and maybe at a later conversation. But when you look at this, when you look at where systems designed like this go, then where you have this snake eating its tail to continue to spin, and as a result, who bears the burden through taxes or through all of a sudden, hey, you can't open your business, so it's like really all these shots, all these policies are being created without our direct input. And on top of that, most people have no idea how this works because we're not taught it in schools. I talked about this last time.
Yeah.
Like, we don't learn these things until we get into maybe upper education, or we educate ourselves. And
even if we do, it just seems like at this point it's so complex that, you kind of, like you were saying, just with the amount of money involved in the numbers you're talking about, you can throw up your arms and kind of be like, all right. And then I guess this is the other thing, and maybe this will, you might want to take this in any direction. Part of what I do when I hear these kind of doomsday scenarios, like I hear a lot of people saying, the whole economy is going to collapse at some point. We can't sustain what we're doing. And part of me at that point goes, if that's the case, it's basically, it is a doomsday type of scenario. Like, how are we then getting out of that? And then I think, well, there's other technologies, perhaps. Maybe we go back to, a barter system where I'm walking down to you being like, you have the eggs, I have the milk. I don't know. But is this where and why cryptocurrency has become, is it a potential solution to this problem? Or is it just another one of these, things that's going to come and go? Or do you see it as, there is actually some kind of technology here that may actually help us get over this? Obviously, I imagine it's still going to be painful, but is that the case or not?
When you said doomsday scenario, I thought of the word apocalypse, and most people kind of equate the two. But really, an apocalypse is just the changing of the times. Which can, if you're focused on the negative, then it seems like the end of times. Right. But every end has a new beginning. And so that's kind of where we're at now, this financial apocalypse. Right. But if I say that, it sounds very dramatic.
But I like the way you frame it, because it's like, okay, it's a death of something, but a birth of something else.
Exactly. And so if we can feel maybe that initial fear or contraction when you hear that emotional charge, when you hear that phrase, that's good because it gets your attention. But also know that like you just said, there's every death gives form to something new. And, the whole world's not going to just evaporate. So there's going to be something on the other side of this crisis, right? Whether it's bartering or, honestly, a majority of where we're at now is also due to the fact that we are no longer an asset backed currency. Like the dollar, the US dollar bill, has not been backed by any physical asset since 1971, when Nixon took us off the gold standard. And so that's when they gained the ability to just print, regardless of it being actually tied to the value of something tangible, like gold, right? And so I think that a newer version of that is where we are headed, where we're, it is unsustainable, and any system is unsustainable without fuel.
So when you say a newer system of that, meaning a newer system, another system that is based off some kind of tangible thing of value. Like we had gold was the value, and then our currency was based off that value. So you're saying maybe where we're going next is we have something like, obviously it won't be the gold standard, but like something else, or could it be the gold standard? I don't know.
It could. And honestly, it could be a combination. It could be a lot of people talk about having a asset, like a basket of commodities or a basket of currencies that do support the new dollar, if you will. And so maybe it's gold. But even if it is something like, let's just use gold as an example, these new digital currencies and digital assets, cryptocurrencies, whatever you want to call them, that's what's going to really allow us to get the best of both worlds, right? To have the stability that we had when physical gold was backing the US dollar. But with these new technologies, we'll be able to manage that much more efficiently and effectively. Where you can actually tie code in each of these currencies to a specific amount of gold held in reserve, fully redeemable, and that sort of thing. And so it's really the technology that's going to get us out of this is what's called digital ledger technology. And that's just a very basic identifier of most cryptocurrencies. Is that it's the functionality of having a ledger, like a financial ledger, like a balance sheet, if you will, that is connected to the global economy.
Let me interrupt the show just for a few minutes because I want to tell you about one of our sponsors, Evolve Telemed. One of the questions I get all of the time, one of the services that you are asking me for constantly is hormone replacement therapy. Women going through menopause, women going through perimenopause, women in postmenopause, women under stressful situations who are dealing with low sex hormone levels, estrogen and progesterone, are constantly asking me about progesterone therapy or estrogen and progesterone therapy. And men, same thing, constantly asking me about testosterone replacement therapy. Plenty of you, many of you, always asking, Jade, can you prescribe me hormones? I need testosterone if you're a man, or I need estrogen and progesterone or testosterone if you're a woman. And I always have to say that I am no longer seeing patients in this way because my educational duties are keeping me so busy. And this is where Evolve Telemed comes in. I have been looking for a company that does bioidentical hormone replacement therapy, and that is critically important. If you're going to be doing HRT or TRT, HRT being hormone replacement therapy for women, TRT being testosterone replacement therapy for men. If you are going to do these therapies, you want the bioidentical hormones. You want the hormones that your body makes naturally, that your body can recognize, that is no different from the hormones your body would make if you were making adequate levels. Bioidentical hormone replacement therapy does just this. And Evolve Telemed is a company that I am now using for my own testosterone replacement needs, and have been super impressed with the way that they have structured their business model. And so I am now bringing this service to you through my partnership with Evolve Telemed. Essentially, the way this works is you go online, you make an appointment with Evolve. Evolve gets a doctor with you on a Zoom call. They go through your whole case. They go through your blood labs. They then prescribe your hormones directly to you, and you can get those hormones wherever you are. You do not have to go to a clinic near you. All you need is to have an internet access point, and you can meet with an expert in bioidentical hormone replacement therapy and get those prescriptions. Now you can see why this is so powerful, can't you? Because this is something that so many of us need and can benefit from for our aging needs, our sexual health needs. These things have profound impact on mood, hair, skin, erections, libido, you name it. These things do everything for our metabolic health and vitality. So I am incredibly excited to bring Evolve Telemed to you. Now, the link that you go to is drjade.com/hormones. drjade.com evolvejade.com/hormones. This will bring you to the Evolve Telemed portal. If you use the code NEXTLEVEL, you will get a discount on checkout for your first patient visit. I'm very excited to be able to bring this to you, and I hope you will use Evolve Telemed. I know you're going to find it extremely powerful to move your hormone needs over to them. Check them out, Evolve Telemed. Use the link drjade.com/hormones. drjade.com/hormones for Evolve Telemed. And let's get back to the show. So when you say ledger, let me just make sure I understand this, because I've heard this described cryptocurrency before. So when I think of a ledger, I think about you come to me and say, hey, Jade, I want to buy something. And I say, okay, I have it. I'm going to sell it to you for this amount. And we make that deal, and then we put it in a book. Brandon paid Jade X amount for this particular product. And then that's in a book. So if there's any dispute or anything like that, we can go and see and say, oh, right here on this particular date, Brandon paid Jade this and that, and Jade gave this piece. So if that's the case, then the computer is codifying that, solidifying that, and making that permanent in a record so that we can make sure that you have the actual dollars to pay me and I have the actual goods to provide you, and that it's that's where I kind of get lost. And then I go, okay, so what happens next, and why is having this digital ledger important versus what we used to do?
Yeah, so the ledger is the network, right? And a lot of these cryptocurrencies, it's just a new, it's newer. They're just newer networks. They're like software companies, right? And the digital ledger is the network. So you've heard the term blockchain before, right? And so the way that these networks are encrypted or coded or designed, it's through cryptography. And so which makes it theoretically unhackable, immutable. So it'd be like having a ledger that you can't keep counterfeiting, because we've had digital ledgers for decades, but they weren't coded in a similar way. They weren't built on the blockchain. And with the blockchain, the way, what that coding does is it makes it very hard to change. Like each block in the chain contains data from the block previously,
and other computers are checking each other, right? So constantly. That you can't hack it because it's not in one central thing. It's a distributed ledger, right? So there's nodes, whether it's all the way down to personal computers, holders of these currencies, you are part of that network. And that's where a lot of people, I think, misunderstand what these assets are. We're used to the stock market. When I buy stock in Apple, I own a piece of Apple, the company, right? When you buy a digital asset, you're not buying stock in a company. These are more like commodities. These are networks. You're buying a piece of the infrastructure. Right? Because like you said, if the ledger is distributed amongst thousands of nodes all over the world, or hundreds of thousands, depending on the network, each one is a component of that. So each holder of the asset, it's like holding a piece that's necessary for that network to keep running. And so would it be the case then that each of us, when we buy in, the more distributed it gets, the safer it gets, and the more unhackable it gets? So I guess the way I'm looking at it is I'm saying, okay, we have this distributed ledger. It's not just on your computer. It's not just on my computer. It's not just on 1,000 people's computers. It's on hundreds of thousands or millions of people's computers, and they're all essentially checking. So if I, on my computer, tried to do something fishy, all these other computers would essentially say, nope, that's wrong. Invalid. So we're not going to, deal with that because we all don't agree, and all these computers sort of have to agree. So the more distributed it gets, sounds like the better it is. That's right. And that brings up an interesting point, or a hot topic in the digital asset world, which is centralization versus decentralization. And that's really where, that's another theme of where we're headed to. The old financial system is very centralized. We talked about central banks. It's in the word, right? And so it had to be, because we didn't have that
type of cryptography, that type of security with what called a trustless network, right? This blockchain network, this distributed ledger technology is trustless because, like you said, like you don't have to trust somebody or some government or some bank or something that your transactions are going to go the way they're supposed to go.
Yeah, it's built into the technology. It runs itself.
It's just, you make the transaction, goes on the ledger, right? Forever. And it's public. It's anonymous, but it's public.
Yeah.
And it can be, it can, obviously we can trace certain things and, anyway, but that's basically it, and so the old system, the centralized system, without that type of security, we had to know who to hold accountable. We had to know who to go to if, somebody stole our credit card, right? A fraudulent charge, you call the bank says, we'll take care of it. We'll look into it. We'll investigate it. Right. And so we had to have some entity that we could go to that, Bank of America can't, if they were to drop the ball and try to scam people, they would lose their business, like the whole, being all over the news. Right. And so, in exchange for that, gatekeepership, if you will, they charge a fee, right? So that they can keep track. It's a closed network, that they have to keep track of who's using it. So if something were to fail or go wrong or some sort of fraud happens, money laundering, they have to be able to track it, right? And where we're moving towards more of a decentralized economy, we're able to do that through this digital ledger, and that way it doesn't have to have the same type of centralized gatekeepers, right? Like I could just directly send you value, money, currency, whatever it is, and we can get more into that too, without going through the bank.
Yeah.
Does that make sense?
Yeah, it makes sense. And let me try to get us caught up again. I like to repeat a lot for the listeners, and also I just want you to check me. So if I'm understanding this right now, the big problem in our current situation is, one, we don't have anything based on value, so we're off the gold standard and we've got no kind of asset there. So what we have been doing is just printing money. So every time we get into a financial scare, like in 2008 or the dot-com bubble or whatever it is, the government essentially has to have the central bank come in and make it rain and print more money, and then things are okay for a while until it catches up with us again. And it seems like these things, are getting closer and closer, or maybe I'm just paying more and more attention to them, but it seems like they're happening pretty much every decade. There's a big one now, and it seems like that's sort of the case. So that, what we're saying, we're hypothesizing that is a problem, and that we can't sustain that anymore. And what you're painting is this whole idea of like, that's not, if I'm understanding correctly, like that's just not gonna last. And there's gonna be some pain involved with this. But there is a silver lining, because we do have these new digital technologies that work off the blockchain, that work off this ledger that is not hackable, that it doesn't involve, a central bank getting involved or a middleman. It basically just is a trustless system that essentially regulates itself, so that we know we can't hack it, and we know if you want to pay me something, I know you have it. It's all sort of within that particular system, and that perhaps this is what is going to save us. Now, one question about that is, what are these digital currencies based off of? Like, what asset is behind them then? If it's not the gold standard, like I know there, with Bitcoin, I believe it was that you were actually doing mining, and the cost of the electricity was the sort of production behind that. But that seems like that could cause a ton of problems, because eventually it gets super expensive and you're just running up electrical bills or whatever. So are they based on anything? Are these things based on anything of value?
They are. They're, it goes back to kind of that analogy I was making with the stock market, where when you buy these digital assets, and I'll get into more specific which ones, you're buying a piece of the network. So they're backed by their network.
I see. Right.
If I just print a dollar bill is a piece of paper, right? Or less than that, it's a number on a screen.
Yeah.
The asset, we'll start with Bitcoin because it was the first. There's only 21 million Bitcoin ever. So it's scarce. It's finite. They can't print more. They can't create more. That's the max supply. Now, the way that we the way that system operates, like you said, is based on mining, right? Which is, what is mining? It's having a computer hardware that can solve super complex cryptographic equations, basically strings of code that are going to secure the network.
Yeah.
And it is very energy intensive. But Bitcoin was developed in 2009. It's 2022.
Yeah.
Right. So I always joke around. It's like, well, what phones were we using back in 2009? Right. So Bitcoin, very important. It's kind of a watershed moment where all of a sudden it's like this whole new paradigm, this new option, right? It introduced the world to blockchain technology. But with Bitcoin, it's very limited in what it can and cannot do, right? And so with Bitcoin as a ledger, you've got how much you're sending and from who to who. It's like three pieces of information: the amount being sent, who the sender and receiver are.
Yeah,
that's it. And it takes several hours for that to clear. So it's on the slower side of compared to most digital assets.
So maybe faster than what we currently have, but slower for digital assets.
Exactly. Yeah. Compared to, sending money, wiring money to somebody across the world, it is faster. I mean, you're looking at 4 or 5 days on average doing the traditional wiring, but with Bitcoin, still kind of slow. We can't introduce conditions, right? And so a lot of these newer assets expand on those basic, identifiers, if you will, and you can start creating if-then statements. So instead of just me sending, instead of the data getting recorded, just say, I'm Jade, I'm sending you $10 over this network. It's like, if you do this, then you receive this. And you can create, just like any program, you can
if this and that happens
forever, right? Yeah, and you could, so contracts, they call them smart contracts, right? And this is just where we're evolving. So, Bitcoin, like I said, kind of woke us up to a new way of doing things, doing finance.
But it sounds like what you're saying is you're hinting at it's not going to be the thing, and it sounds like if I'm hearing you correctly, it's because it's old, it can't do much, and that it's digital currencies have come a long way,
and the mining is unsustainable. There's people have done the math, and if just 10% of the world's population were to adopt Bitcoin as this solution to that financial crisis that we talked about, if Bitcoin was to be the chosen one, if just 10% of the world utilized Bitcoin, it would require the full capacity of our planet's energy capacity.
Which right now, until we find some new energy sources, is not a good thing if you're someone who's worried about, climate change and things like that. So yeah, I've heard that argument as well. So then, to kind of, obviously this is going to be a discussion you and I can continue to have on here, and I hope you'll do that with us. But sort of to begin to give the listener some things to think about. So if we're moving in that direction, digital currencies, and if it looks like the current model is unsustainable, what would you be telling us to become aware of? Because immediately my mind goes, okay, like I've got some money in a 401k. I've got some money in like a traditional savings account. Like, I had some money in Bitcoin, small amount, but I'm pretty much your average person that has, some money. I just bought this house with some money locked up in this, right? But that's it. So to me, it's all based, when I'm looking at myself, I'm like, all my stuff is based on the old model, right? So I don't have anything, in this new model. Now, is that a problem for me? What should I be thinking about? And, if there is a digital currency that we know is going to be, or a way that we should be thinking about it, because I know there's a lot out there, and I guess people like you are probably spending an awful lot of time trying to figure out which of these things to, pay attention to and begin to invest in. So how should we then, as individuals who are locked into this current system, how should we be beginning to think about what to do with our money now?
That's a great question, and
almost an impossible question.
I appreciate the framing, because as you were saying it, we can get, as you guys can tell, we can get real in the weeds on the tech side, and it gets real heady and complicated, and and how the network, it's like tech companies, right?
Yeah.
So taking a step back from all of that, based on where we are with the economy and everything we started out this conversation with, the most important thing I feel like people need to understand yesterday is to protect yourself at any time, your wealth at any time, certainly now, certainly when things are chaotic, is owning real assets, real tangible assets. If what we've talked about indicates if we can all agree there's a problem with having just money or value created out of thin air, then whatever comes as a result of that, those that make the decision now, sooner than later, before the fire gets even hotter than it already is, to invest whatever fiat currency they have, right? Would you rather have cash, right? Or would you rather have something of actual value? And so finding a way, no matter where you are in your income journey, to start buying tangible, limited assets, right?
Oh, that's interesting.
Hard assets. So maybe you're really into real estate, and some people have a lot of success there. Real estate market right now is in a certain cycle, right? But at certain times, you can find great deals there, and what you can say, no matter what, is over the long haul, real estate's done very well. It just appreciates. It has its ups and downs, but land is not typically going to become less valuable, right? There's only so much land, there's only so many houses, and people keep growing, right? The population keeps growing, so it's a great asset to own. Gold and silver, precious metals. It's been used for money for thousands of years. Always been has a value, not just as money, but also aesthetics, right? It has an aesthetic value and it has a utility to it. Gold and silver, precious metals, platinum, all of that is used in these new technologies, right? Like our phones, our cars, catalytic converters are predominantly made out of palladium, platinum, those types of precious metals. And so they will always have a utility. Right, they'll always be worth something, no matter what the dollar's worth or what crisis we're dealing with. These assets will always have a relative value.
Would we consider things like owning a part of a business, stock? Would that be considered an asset versus just cash?
It sure would.
Okay.
It sure would. And, and we could go into more detail on which, some people would say some are better than others, but it's really about timing. Yeah. They all have their own life cycles. There's good times to invest. There's less good times to invest.
So probably a topic for another discussion, because that gets into the weeds as well.
It does.
But let me just feed back one more time sort of what I'm hearing. So we have this issue with the traditional way that we manage our finances. So if I'm hearing you correctly, the old model used to be, in my mind, it's like, oh, hold on to your cash. Cash is sort of king. If I'm hearing you correctly, it sounds like what you're saying is that perhaps that cash that you might be holding on to is not going to be worth what it was worth, and that you might want to actually be putting that stuff into something that is, more tangible, a home, a brick and mortar, building, something you could rent out, precious metals, that kind of thing.
Digital currencies, because a lot of them, now not all of them, like you said, there's we're kind of in the Wild West still, and there's close to at least 20,000 cryptocurrencies on the market. Yeah.
So how would we have, maybe that's the final thing we can do in this particular hour, or, a little bit, is like just talk a little bit about, and obviously pick this up later, but talk a little bit about how are you evaluating these things? Because for me, I'm like, actually, I have some money I would put into something if I kind of understood, right? But I'm sure a lot of people are like, if I knew what to put my money into, of course I would, but what do I put my money into?
Right. That's a great question, because, like with all those choices, there's a high chance that you might get it wrong. Right. And especially, so doing the research, if you don't have time, finding somebody that you do trust that is doing their research and can show it to you. And, when I look at an asset, when I'm evaluating any sort of asset, there's really 5 main criteria. First is, who's the team? Who made it? What was their mission? What's their purpose? right? Number two is the partnership. So not just the in-house team, but who are they connecting with, right? What other large entities, whether it's governments or businesses, or who are they partnering with in the world, right, to accomplish that mission? So team, partnerships, the supply of that asset, right? So when I'm looking at a cryptocurrency or digital asset, it's like, well, how many are there? Is this something that they can keep creating more of? Some do, right? Some you can just keep mining more of. So you want to make sure it's scarce. You want to make sure it has a finite supply. The lower, the better, because the less the supply, as that gains adoption and as more people buy those assets, that supply shrinks, the value, as more people want to buy it, the value is going to go up, the price is going to go up. And so that's really important. Utility is probably the most important thing that I look at. And it sort of encompasses a few of those parameters.
Utility meaning what can it do?
What is it? Yeah. What can it do? Because if you can't really answer that super well, then you're really not invested in much, right? Other than hype. Because if it doesn't have anything, like for example, it's what problem in the world is it solving, right?
Would this be like the argument between, I've heard people make this, where Bitcoin, relatively simple transactions versus in Ethereum, which has, contracts you can do and stuff like that. So would you say from that perspective, then something like Ethereum has more utility than something like Bitcoin? And so everything else being equal, if that was the case, you might look more towards something like Ethereum because it has more use in society.
That's true. And then once you identify that utility, by looking at the team, by looking at how they're progressing as a project, you can see, well, what are their chances of actually achieving? Like, what's the feasibility of them achieving that mission?
I see.
Right. And so when you bring up Ethereum was kind of the next level beyond Bitcoin because it allowed for those more complex transactions to take place. Still insustainably slow, right? And they're kind of a hybrid still between proof of work mining and proof of stake, which is kind of that greener technology.
So has there been a third evolution or fourth evolution since Ethereum?
There are. And I've got a short, the short list of ones that I pay attention to. And, really for everybody out there that's listening, of course, we'll continue the conversation, but, the ones that I focus on out of those 20,000, there's really 6. And the reason I only focus on those is these are projects that satisfy all those parameters I described, right? Like they've got a solid team, they're partnered, major partnerships around the world, big world solve, finite supply, great price point, because that's the one I didn't mention is what's the current price, versus its potential when you're looking at the charts. And really, it starts with XRP. A lot of people have heard of XRP. Not everyone. It's not,
I haven't.
Not as popular as Bitcoin. It's been around almost as long as Bitcoin, but it's kind of gone under the radar. And it's gotten a lot of bad rap. There's some conspiracies behind it where people think that it's the banker's coin or it's the this, that, or the other, and other people think it's anyway. When you actually look under the hood and what it's designed to do, it's meant to be a bridge currency, which directly solves everything that we were discussing earlier that's plaguing the old financial system.
So a bridge currency, when I hear bridge currency, I think of, it's a bridge between the old and the new model. So are you saying this may be a temporary coin we use as we move towards, or is it, it potentially could be the thing we move to?
Think of it as the shuttle between any sort of asset or value. What I really want to touch on, before we part is we've seen the impact of the internet in our lifetime, right? The internet allowed us to have 24/7 access to information. Any question that you have, any knowledge you want to receive, you have access to that ability, right? We could debate on the accuracy of the information you find, but you have that ability. Information can travel globally 24/7.
Yeah.
most things in our life are moving in that direction. The one major area that hasn't is the financial system. The financial system is currently operating on 1970s technology. We touched on this earlier, where it takes 4 to 5 days to send money across the world. And so what we're seeing, what these new technologies such as XRP, and there's a few others too, that are allowing us to do is exchange value the way that we exchange information. 24/7. You don't have to wait till 9 to 5 during Monday through Friday for the bank to open, right? You don't have to wait for 4 or 5 days for money to clear when you send it across seas. These transactions the XRP allows transactions to be settled 3 to 5 seconds, right? So you could send money any amount anywhere in the world within 3 to 5 seconds, and the transaction fee is less than a penny.
And does XRP have built into it some way of making sure that the person selling actually has those assets and that the person buying actually has those assets?
Absolutely. Yeah. The way that it works, it's like what happens in those 3 to 5 seconds is, within the app, and there's multiple apps that can be built on the network. That's another thing that's important is we're talking about these are
so
networks.
It has the ability to expand.
So apps will be built on these crypto centric networks, right? So
when you say app, like let's say I could build something like an Airbnb on top of this particular network platform that uses the technology, and I could rent out my home based on this with faster transaction speeds, without the risk of someone hacking into it or those kinds of things.
Like the next level Venmo.
Yeah. Yeah.
Even something as simple as that.
Yeah.
Right.
100%.
Where I'm sending you money, but instead, it's 3 to 5 seconds. It's cleared, not pending. It's cleared, and it can be anything to anything. As a bridge asset, what I mean by that is think of a shuttle or a ferry. If you want to get from one side of the river to the other, you take a shuttle, you take that ferry, right? And if the river is the global economy and we're sending money all over the world, XRP is the ferry. And so like if you have dollars when you hit send, your dollar instantly gets converted into XRP, goes to, and then XRP travels anywhere in the world in 3 to 5 seconds. Put into
the yen or something like that.
And then right when it gets to the other side or its destination, it converts into whatever they want, whatever they need, right? And so when I say bridge currency, it's like a point of reference of value to where everything is measured against. And
this, and me being an amateur at this right away seems, and correct me if I'm wrong here, but this right away seems like part of the issue with Bitcoin is I have to have the Bitcoin, you have to be able to take Bitcoin. Right. Sounds like what you're saying coins like XRP are solving is they actually do this. And is this an app doing this, or is this actually built into the network where it's like, okay, I don't need XRP. All I need is $1, and I can use the XRP technology to essentially turn that into a yen and have it happen just like that without waiting 3 to 5 days for that transaction to happen.
Yes. What you just said is very important, because in the future, in the world of the future where we're going, not everyone can own these XRP. Not everybody. There's only 100 billion ever in supply, and that sounds like a lot. But when it is the network of value, the internet of value, and everything, and it's the shuttle for quadrillions of dollars annually to be passed through those 100 billion shuttles. When you do the math, it's in the 4 to 5 digits of what each coin would have to be worth to get to satisfy that level of demand. Yeah. Right. And not everybody has to own them to use it. Like you said, people can use the apps. It's the people that own the XRP that own not everybody owns the shuttle. Not everybody owns a gas station. Yeah. Right. But the people that do, that's where the investment piece comes in.
So it'd almost be like us owning a piece of the central bank, but people who don't own it still have to do business through that central bank.
Absolutely.
Even though it's not structured the way the current central bank is. Okay. That's exciting. So let me just wrap up, and then I want to see if you have any final things here. So, just to kind of reiterate, we are definitely potentially running out of the current model that we're in. We do have technologies that potentially can solve this problem. However, sounds like it's the wild, wild west. There's thousands of them. Most people don't know where to go with these things. So you're focusing on things like, okay, who's the team behind it? Who's that team involved with? What is and I guess you're saying this is the most important component. What does it actually do? What utility does it actually have? And it sounds like what you're saying is that there are some coins that act as this bridge, this ferry that can take one currency, turn it into, another currency incredibly quick, all safe on the blockchain. And that we potentially not everyone has the opportunity to own these coins, but we would have the opportunity for people who get in sort of early to own these. We're probably moving in this direction anyway, but we don't quite yet know. And so, correct me if I'm wrong, but it sounds like people like you are out there trying to predict and trying to understand where is the current blockchain technology or digital currency technology, who's the best, and not just who's the best, but what utility does it have and how can it solve the current problem. So what are the other 6 if we wanted to do our research? So you said XRP, there's another 4 or 5?
Yeah, XRP is primarily going to be utilized for back-end transactions. So between institutions, between governments, most people out there won't have direct experience with XRP.
Okay.
That's like the
institutional
B2B type of deal, right? Cool. The P2P version of that would be XLM.
Okay.
Right. Stellar Lumens. Very similar technology. Matter of fact, the guy that created it helped create the XRP ledger.
Oh, this is interesting. So would it be possible we could have an XRP B2B type of situation and an XLM, person to person?
Facing.
Yeah.
Or, front of the house, back of the house kind of thing. Right. Yeah. And then, so they're kind of in their own, they're specifically bridge currencies. They have a very specific role. They address this global economic system kind of situation.
So they might be the best for now to transition us out of the current situation.
And then as we move forward, I really think I focus on the financial system, when it comes to crypto, because crypto is going to be everything. It's not just the financial system. It's going to be legal system. It's all areas of our world will be built upon that. And so there's a lot of exciting technologies out there that I think down the road will come into prominence. But right now, I think the first battleground is what can support this new economy, because as we're witnessing the old one collapse, right? Stock market, it's grim out there right now. Inflation. That was another thing I wanted to say too, is with inflation at 8.5%, let's say you put 100,000 into the bank in cash, in 5 years, that 100 grand will be worth 60 if inflation stays at 8.5%.
Yeah, same with 401ks and stuff like that, right?
So really one of the worst things I think people could do is have analysis paralysis and just like keep their money in the bank, because that bucket has a big hole in it, and they're losing money. $1,000, that's $1,000.
So you'd almost be better if you could have $100,000 under your mattress than in the bank.
$1,000 a week.
Yeah,
that's
crazy.
The size of the hole. In buying power.
Yeah.
And so, but then there's other technologies such as Algorand. Algorand's another digital asset that I love. It's kind of like the newer Ethereum, has a lot of smart contract functionality, is 120 million times less energy intensive as Bitcoin. So it's 120 million times more energy efficient than Bitcoin, Algorand. XDC is going to solve the trade finance issue in the world, right? So shipping and trade, bringing global trade into that kind of Web3 internet of value kind of watershed moment, right? Going from 70s technology to the year 2022. IOTA is kind of another under the radar one. It deals that'll address more of they call it the Internet of Things. So some people kind of get freaked out about it, with your refrigerator knowing when you're out of milk and being able to communicate, so it's a lot of when things become more automated, those are the networks.
Yeah. People get a little bit afraid of privacy issues and stuff like that.
Yeah.
But what's interesting about what you're painting here, and just correct me if I'm wrong about this, but I've always thought about this in my sort of just really basic understanding of this stuff as there would be one technology that we would all switch over to. But it sounds like what you're painting, at least in the short run, is that we might not want to be thinking about it in that way. And we might want to be thinking about these different technologies and the utility they bring for a particular segment. Mm-hmm. You and I doing business together versus two businesses doing business together versus, how countries trade back and forth versus contracts and things like that. Am I thinking about that sort of correctly? So if that's the case, at least in the short term, are you thinking there might be a handful of these technologies that sort of dominate and then slowly but surely? So it sounds like maybe we go from these 21,000 to like maybe these 10 that are, and then maybe these 5, and then maybe we get down to a handful that basically do all the things, and some of them are specialized. And maybe we should be thinking about when we own these, it's more like owning like Apple or something like that from that perspective versus having a coin that we own a bunch of, of the coin. It's more like we're owning a particular technology or a business that's solving an issue that everyone will have to use, but not everyone will be able to own.
It's it's a combination, I would say. You could look at it as a combination of being able to invest in oil, in an oil field, mm-hmm. right? 2 years before the Model T was invented. Yeah. Right? Before everyone needed a car, right? It would be the mid 90s getting into, Amazon, right? Or Google, right? So what we're going to experience is very similar to those moments, those once in a lifetime opportunities where a new asset class is birthed. I think the last one was 100 years ago. So like this is aside from everything we've talked about, just from an opportunity standpoint, where we are in this game and where these assets are priced at now versus where their true value is. It's like Amazon in the 90s. Yeah. There will be 95% will go away due to regulation, because like I said, that Wild West phase isn't going to last forever. And so that's why we make sure that we're investing in the ones that are already certified, getting regulatory approval. It's very important because we don't know which ones are going to last. Yeah. So it is important to start with those fundamental ones that are. So now, I guess now we understand why you're the optimist. So, all right. So let's just go ahead and wrap it up, because I know that this can be tough, and we covered a lot. And thank you so much, because it kind of blew my mind. And of course, I would love to have you educate us on a regular basis on this. Would be really fun. Any final things you want to leave people with, and things that, maybe where you'd want to go in the next conversations? Yeah. I do respect kind of like the information overload of this all. There's a lot, and I've spent the last 2 years averaging 4 hours a day worth of research. So it's kind of hard to condense that into one conversation. So I appreciate everyone's patience and kind of openness to this conversation, and just know that, I'm committed to kind of going deeper into it. And really, the biggest thing is just, having an open mind, not letting fear guide your way, and doing the research. Having the courage to do the research. I think I'd love to. We could kind of go in the future, go into more detail on each of the different assets and the technologies if people have questions about that. But just see it as anytime that you're feeling like the external world is squeezing too tight, and you feel like things are coming to an end, just know that may be true, but it's still, again, on the other side of that is a whole new opportunity. Every crisis breeds amazing opportunities if we can have the fortitude to weather the storm. Yeah. I know one of the things that as soon as this lands, people are going to be DMing me and be like, how do I work with Brandon? Do you work with people to educate them on this and help them? Okay, cool. So how can they get in touch with you you want to give them your sort of background, your company, and just let them know where to find you? Yeah. I respect, people have tons of questions, and I'm sure based on the things we touched on, they're probably a million questions out there. And so the best way to reach out to me is probably Instagram. I'm at Brandon_Belk. You'll get a better feel for who I am as a person and what I'm into, and share information there. I've got 2 Telegram channels that I operate as well, free of charge. If anybody's interested in staying plugged in there, and that's where I'm sharing news that comes across my desk on a daily basis, important announcements. But the best way to get in touch with me is Brandon Belk, BrandonBelk at growinnerouter.com. And, like I said, any questions or, curious of how you can work with me, that's the best way to reach me. Typically I work with people based, starts with education, right? And providing, kind of sharing some of the knowledge that I've come across to help them make informed decisions. And there's a spectrum of that. So anywhere just kind of a consultant, right? Here's what's going down. Here's what I would do. Here's what I'm doing with my money, and assets. And then all the way to more of a white glove type of relationship where I do run a small private hedge fund that helps manage people's assets for them. And so, if people are curious about that, we can talk more.
Yeah, that's fantastic, man. I appreciate you, brother. That's genius stuff. See you next time, everybody. Thanks for hanging out, and see you at the next show.
Much love.